most of our inquiries coming through now are outside Auckland, or it's Aucklanders who have moved outside into the regions and sending through inquiries for insurance. So yeah, there's more people leaving. I think there's main centres like Hamilton where there's an inland port coming. It's like a multi-billion-dollar inland port coming. Christchurch, as we all know, has boomed. And there's several other cities that have a lot more scope.
When the consumer confidence is down, it's such a good time to get into the market. You know, we saw that during COVID. It'll be the same thing we see now. Like if you can get into the market now, there's good deals, you've got negotiating power. It's such a great time because in 5 years, you'll be thanking yourself.
Yes.
And on that rental piece, and especially on the rent side, I'm sure Jith, you'll agree, when you're renting, your borrowing capacity is much more favorable. You don't own your own place. And so you've got borrowing capacity up your sleeve to get into investments. You can rent where you want to live. And it seems like at a bit of a subsidized cost, and you're setting yourself up for wealth in the future, right? G'day everyone, this is Iynka here. Welcome to Investor Journeys, where we chat with everyday Aussies and seasoned investors about their property journeys, the wins, the stuff ups and everything in between. Whether they've got one property or a whole portfolio, we dive into how they did it, what they've learned, and what their journey's been like so far. No fluff, just real stories from real people. So let's get stuck in. G'day everyone, welcome to the IJ podcast. We've got two lovely guests here and it's a bit of a different episode today. We're actually going across the dish, and I mean going towards New Zealand, where I'm originally from. And we've got some very familiar faces, one in particular who, grew up in the same town as I did. And, really excited to unpack a little bit about what they're doing, a little bit about the New Zealand market, and yeah, just talking life in general. So Jith, Maaru, thanks so much for coming on, guys. And yeah, I'm really excited to talk today. So yeah, thanks again for your time because I know you guys are busy.
And thanks for having us as well.
Yeah, thanks for the opportunity.
Not a problem. So do you want to just tell our listeners a little bit about what you guys are doing at the moment, in terms of your business? You're in a similar space, but obviously you've got a bit of a wider scope from what I understand. A sort of overview of what you guys are doing at the moment?
As you introduced, Jith and Maaru. So we run a company called Vive Financial Advisers, focusing on mortgage broking and insurance brokering. So I'm the mortgage advisor, Maaru's the insurance advisor.
Basically, this is the busiest season for us. Every year, this is the busiest season. It's like a bit of a snowball effect that takes place. And so everything that people have put to the side, everyone tries to get it done before Christmas. And the famous line is, I want it done before Christmas. So that's what's been happening. It's been a bit crazy actually, because the housing market has picked up here in New Zealand recently, which is good. And so there's a lot of first-home buyers who have been priced out in the past. They've entered the market. And so there's a lot of activity going on.
So first-time buyers at the moment are dominating the market, which is something we can get into a bit later anyway.
Yeah.
Yeah. So right now, we're going through a growth phase at the moment. So we're looking now, it's got to a point where we're super busy and sometimes it's hard to focus on our social media presence and everything at the same time. Looking into the new year, getting someone to help us and then help us move forward as well.
Yeah.
Okay, fantastic. So you're going to get someone to help with the social media stuff. But I can understand the whole do it before Christmas. And I was just going to ask you, is that primarily why you're busy? Everyone's trying to leave it to the end of the year?
Yeah, I don't know if they mean to. I think it's like something just rewires in them when November hits, and then they're like, we need to get it done.
And it also depends on whether there's specials given by banks or insurers at the time of the year as well. Right now, the banks are giving a large cash contribution at the end of this month. So that's causing a lot of people to take action as well.
Rebates. Yeah, it's always popular over here as well. Do you want to tell something? You say, Jith, you're in the brokering sort of area, but Maaru with the insurance. It's not just property, or do you even do property? What's the breakdown of what you guys are doing in the insurance space?
For insurance, first-home buyers, we take care of the life insurance, income protection stuff, especially when they commit to a large mortgage. For first-home buyers, existing homeowners, is really about keeping their covers relevant to their ever-changing needs and different life stages. And it really comes down to the type of clients we have, because we have relatively younger client who strategically we wanted it that way so that we grow with them. So a lot of them are in that phase of, building careers, building family, establishing property portfolios. So existing homeowner insurance needs are a bit different, but first homeowners are the basic life, income protection, that kind of stuff.
especially over here, it's often forgot about. And I realize how important it is because, you guys know better than me, but you're taking on hundreds of thousands of dollars of debt. This is your biggest financial purchase that you'll ever make. And if you're not protecting yourself, it's a long road down a very slippery path, isn't it?
Yeah, things can go pear-shaped really fast. And I think a lot of people don't realize how much of a thin thread it is. And it's such a shame because they work so hard to get to that property. And it only takes a little bit of work to put a protection plan.
Yeah, like you had that client who got a concussion and they got their mortgage payments and luckily insurance.
And it was completely unexpected because he went to an innocent soccer game and got an injury and ended up with a concussion, out of work for 3 to 4 months, which is a significant period. And then they've got a baby, a 1-year-old. Wife is in between maternity leave and work, so she wasn't fully up and running with her income. So that was completely unexpected. And when he called me, it was like, these things don't really happen to me. And I was like, that's kind of the point. Because you never wake up, any day you don't wake up going, today I'm going to end up with a concussion that's going to take me out of work for months.
Yep. Yeah, it's totally unexpected. And I think the biggest thing you probably hear from people who go through that is, I wish I did this cover, or I wish I did that, and the regrets. And so you'll never know until you actually go through it or know someone potentially that goes through it. So just get it done. And yeah, I think, like I said, it's a very underrated conversation, people just don't have, especially here in Australia as well. So I think that's a great, you guys are putting out there for people to really consider when you're talking about so much money. And it just takes a split second for something to go through. I'm sure a lot of listeners are sort of trying to understand as well with New Zealand. And we spoke about being out of the workforce for 3 to 4 months. The cost of living over there, you're obviously just relative to New Zealand. You only know what's happening there. But in terms of just the general, what you're seeing at the moment with people, is that a bit of a problem? Is that still causing a lot of stress? What's the situation over there like from a cost of living perspective?
So there's kind of 2 economies happening in New Zealand at the moment. There's Auckland and then there's other regions. So Auckland,
that's always been the case though, hasn't it?
Yeah. So Auckland at the moment is still struggling. And we've seen that with a lot of our clients as well. Clients who are doing well at the moment that we're getting are mostly outside Auckland at the moment. So there's places like Christchurch that's actually humming at the moment, but you wouldn't believe it if you're always in Auckland.
Yeah, we're right there at the moment.
Yeah. The difference is quite jarring because, we're living in Auckland. I think we tend to live in a bubble, especially with cost of living crisis. Maybe we don't get out and about outside Auckland as much recently. But then when you go out into the regions and see even just the headspace people are in, they're more open to it because we try to explore a few business opportunities outside Auckland and people were way more open and available. And it's not like Aucklanders aren't, it's more like they're at maximum capacity.
Yeah,
so
they're stressed.
they're in
anxious.
survival.
So let's put it this way, right? The money that you make in Auckland is still similar to everywhere else in New Zealand, but except because cost of living is so high, namely mostly housing and petrol, people have less disposable income than they do outside.
Yeah, absolutely. It makes such a big difference. It's all, nice roses when things are going well, but when COVID hit and inflation's really ramped up. I was living in Auckland for about 6 months in 2023. And, that was when the whole news with the eggs and everything like that was going up there. And Jesus Christ, I remember going to the grocery store. I said, I might as well just go to like the local bakery and get a sandwich for lunch, like $4. So I sort of went through it. But no, I completely agree with the 2-speed economies. Over here, classic one, Sydney, in terms of the cost of living. The wages are a little bit higher in Sydney, not by that much, definitely not prorated, but it is a little bit higher. But yeah, so the surplus income that you have or generally the income that you need to be able to not just invest and live well, just to even survive for a lot of people, especially the young people of today, is very difficult. So a lot more flat sharing or apartments, all that kind of thing. But yeah, it's good to get a good understanding, broad understanding of what's happening over there. So we'll change tact a bit. I want to know a little bit about your backgrounds. Now, Maaru, I've actually known you since you were little, and Jith, we just met the other day, but do you guys want to just share a little bit about sort of your background, sort of where you guys have come from, where you grew up, and you both are in the financial spaces. Like, was that ever a discussion that you had over the dinner table at home, or is it something that you sort of grew into?
My background was completely different. I was conditioned to follow the sciences, I mean, you will get it because you also did engineering. So I was always encouraged to, become a doctor. That's not going to work because the sight of blood scares me. So the next thing was like engineering and other stuff. So that's the road I went down. And then after working for a few years, I realized I don't see myself doing this for a long term. And then I was at a crossroad in 2020 when I lost my job. And so that's when I jumped bridges into the financial services industry. And growing up at home, insurance or finances in general wasn't discussed as much. Because our parents worked quite hard for the money they provided, and there was enough capacity to only focus on surviving and getting by. So things like conversations around finances and stuff wasn't always widely discussed over the dinner table, say. But I think in hindsight, they probably wish they did. But yeah, and even things like insurance was sort of labeled as like a scam. And to their horror, I became an insurance advisor. I mean, things are all good now, but that's kind of the trajectory that I went on.
I can't imagine telling my dad as well that, oh, Dad, I'm going to go into finance when I was at school, especially because he wasn't in finance, right? He was a scientist, and I can't imagine that conversation. I don't think I'll be allowed out of home, most likely, but here we are. So, Jith, what's your story, mate?
Yeah, so this one's a little bit more chaotic, I guess. I've been in Auckland my whole life, so yeah, Jaffa. So basically with us, like the typical, I guess, brown parents, they wanted me to do medicine, sort of went along with it. It didn't quite, I did a science degree, didn't quite work out, finished it. And then I did another degree, accounting degree. Pretty much I had no idea what I was doing. Then when I got out of uni, went to the workforce. And then I found myself going to a property seminar. And I ended up actually doing property trades for the next year and a half in the Hamilton region. And I actually ended up quitting my job to do that full time at the time.
What is property trades?
Basically, so in Hamilton, I was buying and selling properties. Have you heard of contemporaneous settlements? So it's basically you find a house under contract that's undervalued, and then you sort of find a buyer to complete the purchase on settlement date. So I settled with the buyer, and then he or she settles with me. We disclosed it to the buyer and seller, so everyone knew what's going on. I did a few of those. I just sort of explored buying, selling, and then holding a few rental properties at the time. But then I sort of felt that it wasn't for me at the time. So that's when I came to the financial services, mortgages, because then I can learn the other side of it, which is giving lending to, other people, other investors or first home buyers. So that's the background for me.
Yeah. And how do you find the whole brokering sort of career? Like when you first got into it, was it quite a difference in mindset for you, like compared to what you were doing? How did you sort of get into that sort of space?
I think because we were sort of working with other brokers at the time. I mean, I specifically didn't do any transactions with them, but I was aware of what they did. So I found that was probably more my strength at that time because I'm very good with numbers, very creative. So it was actually a good transition. Obviously, the difference in mortgage advising when you actually do it, the numbers part, that's all the fun part, being solutions orientated and creative. The other part is obviously dealing with, it's a lot of emotional labor because homes are quite an emotional thing for a lot of people and they get really anxious and you end up kind of being the guy that takes it a little bit. So that's the two sides of it,
Yeah, I think it's good you had that experience with the property trading first. So you can sort of explain to them some of the situations of what to do, what not to do. How did you, I suppose there's a bit of a stereotype as well with us not getting into business, especially right at the start. You've started quite young. Like, how was that journey for you, starting the business or getting into business rather than a general paying job?
I kind of got into it in the womb, and I probably wouldn't advise other people to do that. So I didn't really think about it. And I got myself into a little bit of trouble initially. I mean, not legally, but more financially. I mean, I do look back and I'm still happy with the decisions I made.
When you've got a passion, you've got a purpose, and you found the right timing, I think it's a great, asset to build on. So yeah, that's great. So you've sort of got from property trading into brokering. Now, Maaru, you've got into insurance. So tell me a little bit more about the New Zealand market that you're seeing at the moment. You mentioned first home buyers are getting into that space, quite rigorously at the moment, which is quite surprising. Obviously, you hear the doom and gloom in the New Zealand economy, but as you've just said, there's so many different economies that it's you can't trust the media all the time. So do you want to tell me a little bit about what you're seeing with the first home buyers?
Yeah, so we're in a position where interest rates have come down, and I think we've sort of bottomed out at the moment. And on top of that, it's still a buyer's market. So there's still a lot of stock at the moment, especially in Auckland. So what that means is with lower interest rates, buyers can come in and they can negotiate more on properties because there's not as much competition.
Yeah. And I'm assuming borrowing capacity has also helped with the rates coming down.
Yes, definitely. So it has increased over the year, because at the start of the year, the testing rates were around 8% and now it's about 6.5%. So it means that people are able to borrow more money now. And that has helped a lot, and that has caused a lot of first-time buyers to come into the market. And there are some 5% deposit options as well available. So that sort of helped as well. Whereas investors is a little bit different because there's always been LVR restrictions for them. And also we had debt to income ratios come in early last year. Along with that, with high interest rates, they haven't been as active, but they are coming back in from what I'm seeing at the moment.
Yeah.
Yeah.
No, that's basically it. And the moment investors enter the market, it's going to be a tough game for first-home buyers. So I am kind of glad to see first-home buyers have their moment in the sun.
Absolutely.
They've been priced out for some time, and it's been quite tough. But now, you've recently had a client who was putting in an offer. Was it her fifth property?
Yeah, so now she's looking for an owner-occupied. So she has 4 investment properties, and now she's looking for owner-occupied. And this is out in Blenheim. Their market's very different. They're actually hitting it. Their one's actually pretty hot at the moment.
Yeah.
South. Look, some of the South Island markets we're seeing is also quite strong. I just want to go into the nitty-gritty because I'm just comparing it to Australia, right? So over here, the big difference is in Australia with deposits, you can get in with generally a 10%. You've got to pay a little bit of lender's mortgage insurance, but other than that, it's generally a lower threshold, even for investors. Whereas in New Zealand, are you still seeing the 20 to 30% at the moment, generally?
So for existing homes, it's 30, but for new builds, you can get it as low as 10 to 15, but that's only for new builds.
Yeah. So for existing homes, which is the majority, it's still a 30% deposit.
Yes, at the moment it is. Except, there's one bank that came out recently and said that they'll go as low as 15%, but that's for a limited time. We don't know when that's going to go away. But generally, ballpark, we're saying 30% for existing.
Okay. And interest rates at the moment, let's just pick a variable investment loan. Let's just say principal and interest. What kind of rates roughly are you seeing at the moment? Because over here, you're getting down to the 5.5s, but you talked about the buffer, the calculation being up to 6.5 here. They've still kept it at about 3 or 3.5% from memory. So we're still assessed at about 8%. So what are you seeing interest rates over there?
Yeah, here most people, because I've read that in Australia, I think you guys have more of a variable rate culture, whereas here it's very much fixed rates. So the investors they can still get, as long as they have 20% deposit at least, they can probably get a 1-year rate of 4.49 at the moment. But if they go for floating, it will be about 5.5.
Yeah, so similar. Okay.
Yeah.
The fixed rate's definitely not that low here, at least for now. Mind you, inflation over here has, somewhat spiked a little bit over the last quarter. So rates have been on hold over here. And so I don't foresee rates dramatically coming down in the near future, in the next few months, whereas New Zealand, I know it's sort of shaping down due to the economy and everything like that. So it's a bit of a different market. So it's good to compare. And I think, as we all know, one of the biggest differences between New Zealand and Australia, although you've got to put a high deposit, we've got the stamp duty that we've got to pay the government. So that all goes to the government. So when you take that into account, or it depends on your purchase price, but that almost takes into account an extra 5% off deposit that you would have put down. It goes to the government. But at the end of the day, generally speaking, it is a lower deposit that you can play with. So it's interesting to see about the first home buyers, and I do agree that I think it's really valuable that there's always access for them to be able to purchase. Are there first home grants available in New Zealand as well?
Not anymore. So there used to be, I think they phased it out. It would have been last year. And the only people that could access that grant were people who were earning below a certain amount as well.
Yep.
So it wasn't available to everyone that were buying their first home.
Yeah. Okay. All right. So that's sort of phased out. But at least, like you said, the rates are coming down. There's obviously a lot of opportunities outside Auckland. Auckland is a bit of a much more pricier city. And, in terms of, what you're seeing in the market in Auckland at the moment, what are you seeing? Is it quite still a bit flat at the moment, or still prices are stagnating, coming down still?
Very much flat at the moment. So I think 2025, there wasn't really any change. Talking to people on the ground, they reckon it's decreased even, like when you talk to the different agents, because these days, especially in the past 6 months or 1 year, when someone tried to sell their house, they would never get the price they wanted. So Auckland, it is a bit of a tough market. And also, as an investor, you probably wouldn't have made much capital gains. Actually, you may have lost money in the last 5 years. And at the same time, yields are not that great here either. You're probably looking at like 3%. Getting 4.5% in Auckland is a pretty good effort. Most people have probably around 3.5%.
That's just same as Sydney and the bigger cities here. It's usually under 4%. So you're doing well if you're getting over. It's generally those townhouses or apartments and all that, but then you've got the body corp on top of that.
Yeah.
Are you seeing, maybe Maaru, you can answer this, but are you seeing many people still staying in Auckland? Are they leaving? Are you seeing many people leaving at the moment because of the cost of living crisis and the affordability? What are you seeing there?
I mean, insurance, it's reflected in the insurance inquiries as well. So usually people think about insurance and they have the capacity to buy insurance when there's a little bit more surplus in their cash flow. And most of our inquiries coming through now are outside Auckland, or it's Aucklanders who have moved outside into the regions and sending through inquiries for insurance. So yeah, there's more people leaving. I think there's main centers like Hamilton where there's an inland port coming. It's like a multi-billion-dollar inland port coming. Christchurch, as we all know, has boomed. And there's several other cities that have a lot more scope. And then coupled with lifestyle changes, because in Auckland you operate at a higher RPM. So those who want to have a slower paced life, especially with building families, I think outside Auckland seems to be the attraction.
Well, a lot of people have left Australia now as well.
Yes, we have lost quite a few to you guys.
Yep. That whole migration piece has happened again. I know. Look, a lot of my mates moved from New Zealand to Australia, and then during COVID they moved back. But they're considering to coming back again. So it's like a two-way thing. But I think the big thing is, look, the cost of living is one thing, but the wages is still it hasn't been really increasing that fast, right? So that they've been struggling to keep up with the cost of living and the affordability in Auckland at the moment too. So I remember living there, and all I remember is not just the cost of living, but the traffic. The traffic there. Maybe it's got better since people have moved out, but
No.
I don't know if it's improved at
The
all.
roadworks are never ending.
Yeah, it's manic. Anyway, it's not all doom and gloom. It is a great city for those who are living there, because we go there all the time. My wife's parents are still there, and we enjoy coming there. And we caught up. We caught up at the cafe, and that was really nice too. What's your plans at the moment yourselves personally? Are you looking to stay in Auckland? Are you looking to potentially move out a little bit? Because I'm assuming your business isn't too much face-to-face as opposed to online. So I'm just asking if there's a need for you guys personally to be staying in Auckland apart from family. What's your plans at the moment? Or do you have any at this stage?
Yeah, I mean, we have actually considered setting up a base outside Auckland, because we've actually moved further south since we last saw you. So we're like 10 minutes away from Waikato.
Okay.
Yeah, in Hamilton. Yeah, so we do have thoughts of setting up a base in Hamilton. But you're right, like a lot of our meetings are online, but I guess when they search us up on Google, there needs to be some kind of location. So yeah, we do see that there's a lot more optimism outside, and it is something we want to explore. And outside of that, we have even thought about like down the line, and maybe could go across the ditch. It depends on if this business, how it can take it overseas or not as well. But that's at least 3 to 5 years away. But yeah, we do have plans on looking to set up base outside Auckland.
Yeah, got it. Okay. So I was just going to ask you, do you think you'll buy a place, or you just continue renting to be flexible?
Flexibility is pretty good at the moment.
Yeah.
Yeah.
Yeah, especially for the last few years, which has been quite tough to be in business. Renting has allowed us to have that breathing space to really scale and work on the business and build it to a point where now basically we can operate the business from anywhere, and front to end, the advice process can be done online. Our advice process, more or less paperless. Yeah,
it's a good time to be a renter as well, because when the interest rate went up by like 2 or 3% a couple of years ago, our rent pretty much stayed the same for the last 4 years. It only went up like $20.
Yeah, right.
In the last 4 years. So it's been nice. So we've been lucky in that sense. But yeah, eventually at some point we do want to get into property as well.
Yeah, we have periods we were, should we or should we not? Should we or should we not?
Yeah.
And you're thinking about your business and investing back in the business and all that, I assume, as well.
Yeah.
So look, you guys are still young. You guys got plenty of time in your future, and you guys are obviously doing really well in your business. I was actually going to just ask you one last question on the rental side. With respect to investors, are you seeing many pull out and therefore rents are heading north because they're pulling out because of the cost of living and all that kind of thing? Because that's happening to a certain extent over here. Well, it was happening when rates were quite high. A lot of investors are coming back, and we're seeing that as well. But What's the situation with that kind of thing? Are you seeing many investors coming out and having an impact on rent?
Yeah, so there are some investors that are trying to sell because also the bright line test changed as well last year, which was more favorable to selling again.
Yeah.
But actually the rents have gone down, and it's a renter's market at the moment in over here.
Yeah.
So it's very
because people
easy.
are moving.
Yeah.
It's very easy to get rental I mean, if you're a tenant, it's very easy to get one that you want.
There's a lot of sudden sales of houses happening as well.
Is rent vesting a thing over there? So do you know what I mean by that?
Yeah.
Yes,
Yeah.
like I'm a big fan of rent vesting.
Yep.
It's something that we personally follow as well, because in the last year or so, for example, if you look at like a lot of rent adverts in Auckland especially, you will see things like, you know, bond and rent in advance plus 2 weeks of free rent. So these, you know, people are quite desperate for good tenants or just tenants in general. And there's a lot of properties on the market, including like even the one that we moved into.
That's what I was going to say, yeah.
Yeah, yeah.
And the one that we just moved out of, they put it on the market for sale. And it is harder to sell and harder to get tenants as well.
Tenant, yeah.
Yeah, I think the bottom line, we see this all the time because we're all in the property spaces. When the consumer confidence is down, it's such a good time to get into the market. You know, we saw that during COVID. It'll be the same thing we see now. Like if you can get into the market now, there's good deals, you've got negotiating power. It's such a great time because in 5 years, you'll be thanking yourself.
Yes.
And on that rental piece, and especially on the rent side, I'm sure Jith, you'll agree, when you're renting, your borrowing capacity is much more favorable. You don't own your own place. And so you've got borrowing capacity up your sleeve to get into investments. You can rent where you want to live. And it seems like at a bit of a subsidized cost, and you're setting yourself up for wealth in the future, right? And that's same thing over here. Over here, negative gearing is a thing. Over there, I know there was been a phase in, phase out with the Labor and the National. Like, where do you see that going at this stage? Do you have a view on whether you'll be able to claim your expenses back on rentals? It depends on the government, I assume.
Yeah, because when National came in, things did change. They try to make some things easy for property investors. So they also reduced a bright line test so that if you've had your house for 2 years old, then you can sell it without it being a taxable activity. So it really depends on the government that comes in. I don't know if capital gains tax is going to be a thing here for some time.
Yeah, so we'll wait and see. But yeah, it's certainly things that's very much a thing here in terms of capital gains tax and negative gearing. But look, it's interesting to understand the dynamics between the two countries and the pros and cons. So really interesting. So I think that gives a really good snapshot of what you guys are doing, your business, the property market over there, all the intricacies. So really appreciate you guys, giving us an overview. We'll look forward to your plans. I'd love to see you guys coming over here in the future if you can. I think that'd be great. Who knows where we'll be? We're the same as you. We're renting because we want to be able to move and be flexible later on in life as well. Similarly with the businesses, we're quite flexible in that regard. So look, for those Kiwis for now out there, make sure you check out Jith and Maaru's business, like the content that you guys are providing. We're always on the same page with, the types of messaging we're providing, I feel. And, Maaru, you also just were a finalist recently at one of the awards. Do you want to tell us a little bit about that?
Yeah, I was a finalist at the New Zealand Insurance Industry Awards for the New Zealand Young Insurance Professional of the Year, which was completely unexpected because we're a baby, tiny advisory. So when they were calling out our name, it actually felt surreal because there were some really big names, and even the big companies, only like the ultra senior people were in the room, and it felt quite surreal and humbling. And it was an individual nomination, but it really is like a company nomination. That's how I see it, and that's how we feel it, because a lot of the groundwork for insurance, Vive Insurance is the longest standing service that Vive has provided to date. So it's the bread and butter that started
it's
everything.
A core. Yeah.
So it was really good, and it was a good way to reflect and be grateful to our clients and supportive network we have as well.
Absolutely. I think you guys, and this is what I've worked for big companies, I work for small companies. I'm a small company myself, and you have every right to be in those places as well as the bigger companies, no matter how long they've been there. It's all about the service. It's all about how, being boutique, having that interpersonal relationship and always being there for the client, not just having 10 different people. In my opinion, talking to that one client, you're the sole person. And I think that's great and it speaks volumes. So well done and congratulations. And I'm sure you guys will go on to bigger and better things. So for those out there who are, looking to either, get a loan, talk to Jith, personal insurances, talk to Maaru, please check them out, Vive Financial. So guys, thanks again so much for coming on today. I think especially the Kiwis and definitely the Aussies as well will understand some of the intricacies between the two, and good to talk to some Kiwis on the podcast for once as well. So thanks again for coming on.
Thanks a lot for having us. Really appreciate it.
Yeah, thanks, Iynka. And yeah, likewise, nice to connect with another Kiwi over in the other side.
No worries. We'll catch up for a coffee soon. That's my shout next time, Mac.
Sounds good. Yeah,
We'll catch you soon.
All right. Thanks, guys. Thanks, everyone, for tuning in, and I hope you got a lot out of that one. We'll see you on the next episode. Cheers.
Hey guys, thanks for tuning in. If you enjoyed the chat, feel free to drop us a rating on Spotify or wherever you listen. It helps us reach more listeners to help them with their journey. Catch you in the next episode.